Uday Kotak spoke about the current scenario, the current economic scenario, and the impact that the global macro has on the marketplace. Let's hear out what he had to say.
India is stuck between need for foreign flows and need for low commodity prices. Unfortunately, the correlation is low commodity prices is low foreign flows, high commodity prices is high foreign flows. From an Indian point of view, I would much rather see a fundamental improvement in India rather than steroid-like capital flows.
At the start of 2012, all of us said that 2012 is going to be a breakout year for BRIC equities. The view was that you'd see inflation beginning to come off. Expectation was that the rate cycle would begin to turn. Today we're sitting in the middle of 2012. We've seen none of that happen. What do you believe the outlook for the remainder of 2012 is?
I think, George, you've got to divide it into two parts. One is economy and then is markets. I think the economy's trajectory down, which has started about 6 to 9 months or a year ago, is still probably not bottomed out. So you got to first see the economy coming close to bottoming out. And then when we are confident that we have bottomed out, we will see the beginning of the economic outlook either remain flat for a while or gradually trend up.
You engage with the global investor community on a regular basis. When you engage with them, what is it that they tell you that they'd really like to see come out of India? Do they say that they'd like to see the government move really fast on the issue of reforms? What are their biggest concerns about India before they say they're going to allocate capital?
The global investment community is not at this stage in a tearing hurry to dramatically increase allocations to India. What we need to do is what makes sense for investors, global or local. The problem which I face or I'm unable to have clear answers on is if Indian equities have to do well, where are the Indian savers? We are only depending on some foreign saver to come and save us. The Indian saver over the last 4 or 5 years has been extremely smart. He's protected his capital. If you look at the peak of the equity markets, which was January 2008 to now, markets are down 25%, so he would not even have got his principal. So the Indian saver said, I'm better off putting money in fixed deposits and gold. And so far, he has been smarter than